So with us here today, we have Ollie Purdue. Welcome, Ollie. He's one of the founding partners of Antler UK. We're going to discuss a little bit about the fund, its strategy, its portfolio, and where it's going from here. So tell us a little bit about Antler. Tell us a little bit about you. How did you get to Antler and where everything is today?
Yeah, so Antler is a early stage VC investing in the most visionary founders at day zero. And what that means is we're the first investor in most of these companies, and we have a particular investment style that actually means we invest in businesses before they even have the idea or before the co-founders even know each other, which we can get more into later. Before Antler, I was a founder. So I built a digital bank called Loot, ran that for 5 years as CEO. In that time, kind of led it from pre-seed all the way to Series B. And we had about 200,000 current accounts and processed $250 million in the UK. Being a founder, I wanted to work with founders and work with the best possible founders in the ecosystem. I found that Antler has got a really great model of finding and attracting the best people to come and build businesses with us. So that kind of system really excited me that I could join and work with all of these people right at the beginning of their businesses.
Yeah, great. I mean, and also only 7% of VCs are founders. So yeah. I think that in itself differentiates you and your team. So what is the focus? You touched on it a little bit there, earlier stage, but what do you look for? Do you have a particular sector that you focus on or stage you look at? Tell us a little bit about the types of companies that are in the portfolio.
Yeah, so Antler is a generalist fund, so we can invest in any sorts of business. And we've got businesses in stuff like cybersecurity or healthcare, or even a D2C lipstick brand. So we got a wide range of all companies. The reason we have that is the founders have to have a really great founder fit. So we really look for founders who have proven ability to build in the company or the space that they're looking to innovate in. So a couple of good examples would be a business called Home Things in our portfolio. They built a D2C home cleaning company. Now that business is very IP heavy. They had to build the product, they had to design it, they had to manufacture it all themselves. And now they sell it nationwide in Waitrose. And they've been growing really crazy fast since we backed them at the beginning. Another business is Baselime. And that's a business that's helping with observability for serverless architectures. So more of a tech-heavy business that Boris, the founder, has got the right experience and also the right drive to build that company.
Yeah, and Baselime, recently raised from Sequoia, didn't they, in their pre-seed round?
Yeah, that was a really great result for Boris in the sense he went from the Antler program where we invested in the first investment, and then 6 months later, a really oversubscribed round with Sequoia, Forward Partners, a bunch of really great funds investing in it. And that can show sometimes when the right founder and the right opportunity come along, they can get really great progress really fast.
Yeah, that's really interesting. And then specifically talking about that investment, early investment, that's a differentiator for Antler. And you hinted at it at the beginning. Could you tell us a little bit more about the program and how it works and why it makes you different to other early stage investors?
Yeah, so unlike a typical VC, Antler invests what we call it day zero. So what that means is 3 times a year, we run a big cohort where we bring in 60 founders that we've sourced and found from across the UK and even from abroad. They join us to work with us for 10 weeks. During that 10 weeks, they meet each other, they form teams with each other within that cohort, and then they start working on a business idea. During that 10 weeks, we're both assessing them and coaching them to make sure we have a lot of faith in their abilities, make sure they're building in the right sector, and make sure they really understand the business they're trying to build. And also checking the chemistry between the founders, which is really important. And then at the end of the 10 weeks, we have an investment committee, and we'll typically invest in roughly a third of the companies that pitch. So the bar is still exceptionally high. And unlike other VCs, we spend the whole 10 weeks assessing every deal we see or every founder we see during that process. So we don't have a rush to make an investment too quick, and we don't have to jump too quickly when we're not sure about the business fundamentals. So what we get a big benefit on is not only are we the first investor in and a really early stage investor, we do a ton of DD before we invest, which is really good.
Yeah, I mean, and we all know that particularly over the last couple of years, there's been a compression in the amount of time most VCs have had to make a decision. So it is a differentiator there on diligence. Now, you talked about the things that the portfolio have and the way you look at them. How do you support them on route to getting there? Because a lot of them are coming to you as, just capable people, and they need to form relationships with their potential co-founders and then come up with their ideas. So how do you help that process happen?
Yeah, it's pretty interesting. So they join us, and some founders have a pretty clear idea of what they want to build. They've got experience in the space and they know it. And some founders don't, and they're just ambitious. They've got the right drive. They're ready to start a company. Interestingly, actually 60% of our founders are second-time founders. So that tends to be a bit more helpful for us, because then they kind of know the process of customer discovery. And then what we do is we pair them up with great advisors and mentors. So once they've got a team together, we organize office hours with the Antler team, but also our venture partners. Our venture partners are people like Gary Dolman, one of the co-founders of Monzo, who spends a day a week with us coaching our teams. So you get exposure to really great advisors and mentors the whole 10 weeks. And that helps you iterate and work on the idea you're building all the way up to the investment committee. And at that point, when they pitch for us for funding, it's actually scary how good those businesses are. We've had a company once that already had $500,000 in like booked revenue by the time that they were pitching to us for funding. And that business was only under a month old. So like the pace these businesses can build at once they're given the right resources and the right environment is really good.
I bet you that was an easy yes then, that $500,000.
That was an easy yes.
Yeah. And so looking at the fund from an investor perspective, how many portfolio companies would an investor in the SEIS fund expect to receive? And over what period will you deploy that money?
Yeah, so typical deployment is around 2 years, and the minimum expectation on portfolio size is 35. That's our opinion, is that's the minimum acceptable diversification at this early stage, because it is early stage investing. But that's a lot bigger than if you were to do crowdfunding or make your own angel investment portfolio yourself. Investing takes a lot of time. So if you wanted to invest your personal money, getting to 35 companies in 2 years is almost a full-time job. And what we can do is we can bundle that into the Antler program, which means you know that we're spending all that time with the founders, and then you're also getting a diversified portfolio.
Yeah, that makes a lot of sense. And then if we go back to finding these founders, so before you're helping them, before you're investing in them, how did you get them to come to you? How do you source these individuals?
Yeah, there's two ways we do that. We're quite lucky that Antler is part of a global group. So Antler globally exists in 13 countries where we're actively investing, but we have 23 offices around the globe. And that has a really great network effect, that if a founder in Singapore got funded, suddenly their friends or their old co-workers would have heard about Antler, and then they might apply in the UK. And what that means is for each cohort where we accept 50 or 60 founders, we get close to 2,000 applications. So that's a lot of people for us to interview, sift through every cohort to make sure that we're getting the best possible people in. But we also have a scouting team who do outreach. So we look for people who have worked in a startup before or worked in a high growth business, and we think would probably be ready to start their own company. And we reach out to them and invite them to come to a session, to talk to us, to see if it's the right time. And we build up this backlog of people. And this is how we're able to get 50 or 60 people every 4 months who 60% have built business before. We've even had people who have exited businesses on the stock market. In the last cohort, actually, a founder floated his last business for $2 billion on the US stock market. So the quality of the founders we can bring in is really, really high. And it's because they know that they're going to be surrounded by like-minded people and that our bar is exceptionally high. Now, one thing to add though is even though the bar is exceptionally high, we're not talking necessarily about like the top unis or like the right academic profile. Really, we're looking for drive and grit and experience and stuff that would give us the right signals that this person could go build a business. And that doesn't necessarily mean they have to come from like the top uni or they have to have exited a business before. I think we're pretty good now at spotting those signals from anyone.
Yeah, the hustle signals.
Exactly.
Yeah. So when you are getting to that stage of deciding about investing, are there any characteristics, common characteristics? You talked about grit. Is there anything that you see there? And do you look at anything else apart from the founding team? Do you check the market? Because we all know at early stage, the product you can invest in can very well change. Yeah. So what is it you're focusing on there?
Yeah, so when we invest, first of all, we've had tons of data gathering. So we've not only interviewed every founder individually in the team, we also interview them when they decide to form a team, and then we coach them every week. And the coach is actually making an assessment every week, and we write up a report every week on their progress and discuss it as a team. So by the end of 10 weeks, we have a really good idea of trajectory. So we know if you're watching a team for 10 weeks and their week over week progress is really, really fast, that gives you a lot of confidence that if you do invest, they'll go even faster. Whereas if you have a business where every week you're kind of helping them iterate, but the performance is quite slow, or they're not really getting there, that kind of low trajectory is an indication that they might not be the right founders for that business, because the right founders have a really great unfair advantage. They can move much faster. They understand the customer base. They're much better at building fast. So we look at trajectory and then founder fit. So whether the founders do have the skill sets or the experience to build in that space, and that's really important as well. And then finally, the business fundamentals. Most big businesses have a major pivot on their way to success. So it's quite important that the market size isn't too small that would prevent a business from pivoting. And then also that the business fundamentals just do make sense. And to work that out, we bring in advisors and even external VCs to come help us assess these businesses. Being part of the global Antler network means that we've got 600 advisors, and they range in every different sector. So if we're building a business in cybersecurity, we can call up some experts to come and talk to the team and to give us the credibility that the team know what they're talking about in the space and the business makes sense. And that's really important as well.
And so how has the fund been performing since it began?
Yeah, so we are early. So our first investments were in 2019. So it's still quite hard to know where the end up performance would be in the fund. But given that, we've got some really great metrics that show kind of where we're heading. So we've made over 50 investments. So far, all but 2 are still active. And at the first stage, you would normally lose 40% of your investments before they even reach a year old. So on that basis, we're doing quite a lot better than expected. In addition, over 85% of our companies raise more money before a year's over. So within a year, they've raised 100 to 300K, or in the case of Boris, 1.5 million. So that's a really great example that shows for us that other investors see our businesses at a high quality bar. So as I mentioned, we are still early, but I think those indicators are really strong. One of the other important metrics that I'm quite proud of is that 35% of our businesses have a female co-founder. Now, the industry in VC is terrible, right? Only 2% of capital goes to female entrepreneurs. Our model, because we bring in top quality founders and help them start businesses, I think is a bit more of a meritocracy in the sense that we find the best people and they build the best businesses. And that means naturally we have a more diverse investment strategy.
Great. So changing tack a little bit, just to talk about the wider market. Now, we're recording this in 2022, which has been an interesting year economically. We have seen since the beginning of the year, the markets almost without respite going down. And particularly at the later stage in venture capital, which is more correlated to the public markets, we've seen some valuation compression. How has that been affecting Antler, and what are your thoughts on it?
Yeah, it's a really interesting point. I think early stage VC is the least correlated to the public markets. So out of any investment you can invest in, early stage venture capital is actually, in theory, the safest, because it takes a very long time for those businesses to get to the public markets. And by that time, normally any sort of market correction's over. For example, the average kind of bear market cycle is a bit over 3 years, I think. And it will take that amount of time for our companies to just get to Series A or Series B, which is still quite far away from an exit on the public markets. So we're quite uncorrelated there. As a result, we've not seen any slowdown really. Like the early stage VC in the UK has a lot of capital to deploy, and they're looking for really good signals for strong businesses. And having Antler as an investor, they know that every business has gone through a pretty intense 10-week process before we even invest. And then we've helped them get their product out, get to product market fit. So I think actually other VCs will look for those signals of quality, which will help our portfolio.
Ollie, a lot of our investors are new to venture capital. They're making their first investments into VC funds, or they're now looking at different opportunities in VC that they maybe hadn't before. So why should they invest in venture capital versus the plethora of alternatives out there like art or crypto or just the stock market?
Yeah, it's a really good point. There's a bunch of options out there. I think venture as an asset class has outperformed almost every other asset class, but people don't really know that because they don't normally have access to it. But this is where a lot of businesses like big pension funds actually allocate quite a lot of capital to. And wealthy investors who have access to normal VC funds put quite a lot of their capital back into VC. So it's an industry which is funded by entrepreneurs to invest in the best entrepreneurs, and it tends to outperform. I personally also think it's more exciting, right? You get to invest in the next wave of tech companies. and you get to see them develop and be part of that journey, which you wouldn't normally have access to if you were in the public markets when those businesses are already 5-10 years old.
No, that makes total sense. And if we look at a lot of our investors, some have done crowdfunding before or a bit of angel investment. What do you think differentiates that, which is the same underlying asset, from a professionally managed venture capital fund?
Yeah, for me, I think the biggest differentiator is the time you can allocate to it. So if you invest in crowdfunding or an angel investment, it's your decision to work out if that business is going to succeed. And there are some examples, maybe you know the business or you know the founders, but that's a really easy decision for you. But then it's very hard to get the portfolio to the right size. In early stage venture capital, you need a lot of investments to really hedge your risk and make sure that you've got a really good portfolio. So the benefit of investing in venture is you're giving that to people who that's their day job, that's what they do day in, day out, and you can get them to help you build the diversified portfolio. So at Antler, as I said earlier, we do about 35 investments for each SEIS investor. And that means that you're really diversified versus angel investing, where over a normal investment period, you'd have to do over one investment a month. And if you've got a busy day job, trying to source and then assess and then do the legals for one investment a month is way too much work. So I think that's the benefit of getting into venture capital versus trying to do it yourself. I think doing it yourself is good on like a one-off, but to build an active portfolio, I think you have to do it through venture.
So just to round off, thanks very much. In a short sentence or two, why should someone invest in an SEIS fund, and why in particular Antler?
SEIS funds are a really great tax vehicle to invest in. I think that's pretty common knowledge now. And the benefit of it is you're helping businesses get started. So you're able to invest in the earliest possible stage of these businesses and help them grow. I think at Antler, we've built a model that really makes that an institutional thing, in the sense that we do this 3 times a year. We've already done 50 investments. We've got a pretty well-established model now that I think we can prove helps our companies build good businesses and raise more money and grow. So you're kind of buying into that model and that process of investing, which has been through a lot of iterations. As I mentioned, we're in 13 different places globally. So we've done this model hundreds of times now. So I think by investing into Antler, you both get the really great tax benefits of being an angel investor, combined with the institutional nature of how we invest and the programmatic way we invest, which I think now we've got the data points that shows it's really working.
Great, thanks so much, Ollie. If you'd like to learn a little bit more about Antler, you can just check out the information on this fund page. And if you've got any questions, then use the live chat or the email function to get in touch with us. Thanks.